So it's been a hot minute since I spoke about Palantir, I know, but it's time we raise an important question. Given the fact that the stock is up 38% year to date, is this too late to get into Palantir? Now look, I don't want you to click nothing. I don't want you to smash nothing. I don't want you to buy nothing. Just listen with me and let's get this show on the road. Of course, a fair disclosure before I get started, I'm a Palantir bull. I'm a Palantir investor. Palantir is my biggest position, and none of what I'm about to say right now constitute any sort of financial advice, just sharing my own opinion about a publicly traded company you all can research for yourself, and I urge you to do so. Now, here's the thing. You look at Palantir, 38% give or take for the past few months. You look at the Snowflake stock, a stock which was traditionally hyped to be way better than Palantir, almost 7% at the same time. You look at benchmarks like the S&P 500, up 8.3% at that same time. You look at the NASDAQ, 16%, double the S&P 500. And then you go back and you look at Palantir. Now, you know that Old Spice commercial? Look at your man, look at me.
Hello, ladies. Look at your man. Now back to me. Now back at your man. Now back to me. Sadly, he isn't me.
This is literally it. Look at your other stocks, look at your index, look at Palantir. Quietly, under the radar, almost 38% year to date. Now, I'm always not super excited about getting into a crowded trade, because if everybody's actually buying Palantir stock right now, if everybody's hyped, as an investor, it's probably not a good time for me to open more position, more exposure during times in which people are flocking into a stock. And that's why the best times are usually when the stock is getting beaten down if you have a strong thesis, which is something I've done consistently over the past 2 years. Now, personally, I got a lot of flack for supporting this stock, for saying it's a great investment for me over the past few years. People have taken some shots at me for saying that this stock is legit. Many videos have been made, many things have been said, and let's be honest, I couldn't give less fucks about what people say. I do me, you do you. For me, nothing has changed. So let's take a look at Palantir at $8.80 with a 37% spike over the past few months. Is a good investment for a long-term investor named Tom Nash based on my own thesis. Hopefully, it's going to spark a little spark in you to go and research this thing for yourself and decide for yourself. Now, I'm going to start with the homepage here in Stock MVP, which is my own platform. More on that at the end of the video. I don't want to waste your time with promoting it during the analysis stage of this video. So, looking at the stock, you can see that the majority of this spike actually happened over the past 3 months. So we're at 37, 38% year to date. And over the past 3 months, it's actually went up 27.5%. Now, here's the first thing you should pay attention to with a stock like Palantir. A stock like Palantir have a lot of short activity. If you go and scroll down here, you see that we have over 7% right here of short interest on the stock. This is not the highest shorted stock you'll find in the stock market, but it's definitely heavily shorted at over 7%. And short selling interest in the stock usually applies downwards pressure in the short and medium term on any stock price. And Palantir is no different. And as a long-term investor in the stock, you should be aware of this, because if you see fluctuation in the price, you have to understand this stock is heavy on retail participation. It is heavily shorted, and that's why you will see a lot of volatility with the stock. And if you are considering the stock for your portfolio, you have to have the right stomach for it. It's not for everyone. Now, if we scroll down here, let's look at some basics about the stock. Now, some of you that are long-term Palantir investors, you've seen this, but for those of you who are a little bit new to the stock, I'm going to run through it in about a minute just to show you where things stand for the stock. Now, Palantir as a company, Palantir's management, have always treated this segment, revenue, as a segment that's supposed to bring about 35% year over year. They later adjusted it. They backtrack, but in our own original gangster minds, we still remember that 35% year-over-year CAGR. Now, they did 23.6% year-over-year. And for us, this was a disappointing number because we still remember that 35% they promised back in 2020. However, what you do have to account here is the fact that this has been a horrible year. Business isn't good for anybody. Look at the layoffs. Look at the economy. Look at the cost of capital. Look at the banking sector. Everything is hurting. So in a year like this, to give me 23.5% growth in revenue, I'll take it. It's not the best, but in this climate and this environment, it's a pretty impressive number if you actually don't pay attention to what they said before the economy went tits up. Now, the one impressive part for me here, again, as a long-term investor, I love this trajectory. What I'm looking here, I want to see how much the revenue is growing. And at the same time, I'm looking at the expenses and I want to see in which direction they're headed and what's the trajectory. So as revenue growth is in the mid-20s, and I expect it to remain in that area for a while, I'm looking at the selling, general, and administrative expenses. And I'm seeing 1.2 billion. Now, this is a very high number if you compare it to 1.5 in revenue. So if I sold 1.5 billion and my SG&A is 1.2 billion, that's way too high. It means I'm still a long ways away from proper profitability. I know, Palantir is GAAP profitable for the first time, but this is way premature. Looking at this number, they need to do more work on this. But if you're looking for some good news, and this is exactly what I'm about to show you, while revenue is growing at a rate of 23.6%, which is right here, SG&A is only growing at a rate of 6%. This is something I personally love to see. It tells me, yeah, things aren't great right now, but the trajectory for the revenue is way faster than for SG&A, and that creates a lot of arbitrage for me because investors are not impressed with 1.5 versus 1.2 SG&A. But if you look under the hood, you see that the trajectory is incredibly impressive. And the same story, even better, happens when you expand the expenses and you actually take a look at operating expenses as a whole. If you go and you expand operating expenses versus revenue, then you see again, operating expenses are 1.6 billion, revenue is 1.5 billion. Not brilliant, but look at the growth rate here. Operating expenses are growing at 2.8%. 2.8%. Revenue grew at 23.6%. So the revenue of Palantir, this is the part I want you to listen very carefully. Forget about the numbers. Look at the percentages. Look at the trajectory. The revenue growth of Palantir is happening at a pace of 10x compared to its operating expenses growth. Now, as much as you may not like Palantir, and I know there's a lot of people who are bearish on the stock for whatever reason, and that's okay. There's good reasons not to like the stock. But you can't tell me with a straight face that a company that grows revenue 10 times faster than it grows operating expenses is going to be unprofitable for a very long time. Now, the other thing I want you to pay attention here. Pay attention. I might patent that. I might patent that. Sorry, I don't know what's going on. Look at this thing here. And again, the OG Palantir investors, you all seen this a million times. I know. But for those of you who are a little bit new here, peep this for a second. Cash and cash equivalents, 2.6 billion. Total debt, 249 million. That means that this company has 10 times more cash than it has debt. It means that it can literally pay its debt right now, go to zero debt, and stay on 2.4 billion of cash this second. So the only reason I think they're keeping this debt is probably it's cheap. I'll be surprised if they have what's their interest expenses? I can't see it here. So here's a good example of how you can customize this thing. So this is stock MVP. I don't have interest expense here, and I'm curious to see how much Palantir is paying. So I can click right here. This is actually organic. I didn't even plan to do this. Where's interest expenses? Let's find it. Okay, here we go. You see this? Interest expenses. I add this feature. I do create profile, and then I'm going to get to see how much. I don't have to dig around in the Palantir financials to find that out. That's the beauty of my platform. Sorry, I'm not trying to promote it. I'm just showing you how to use this shit. Okay, so let's go to interest expenses. Now we have it. Interest income. How the hell did they generate 20 million in interest income with a 249 million loan? Sorry. So this means, oh man, this means that this 249 million of loan is pretty much interest free. This is incredible. Every time I look under the hood of this company, I like it a lot more. Look at the total assets, total liabilities ratio. Again, phenomenal. You'll be stretched to find something like this. Look, liabilities are 800 million. Assets are 3.5 billion. Assets are growing at 6.5% per year. Liabilities are dropping at 14%, 14.5% per year. I mean, you couldn't have asked for a better setup as far as the health of the balance sheet and the health of their financial results. I mean, this company is definitely headed in the right direction. Has a lot of problems, but definitely headed in the right direction. Now, again, I want to keep showing you some of the things that I think justify its incredible run. And I think this time, unlike what happened in 2020, there's no hype around the stock at all. People are on Wall Street bets, are not talking about it. There's not a lot of excitement. Even I haven't made a lot of videos on it, right? So with the lack of excitement, the company is slowly but surely building its growth. And look, I'm not going to celebrate here Palantir at $8.8 per share, which is a long ways away from where it should be and still $1.20 below the DPO price. But I will tell you that this is a step in the right direction, and it's fun to see some positive momentum. Sure, why not? Okay, so now let's take a look at this thing here. So on Stock MVP, we have this analyst aggregator tool. So again, not that I'm putting a lot of weight on what analysts are saying about anything, let's be honest. Take it with a grain of salt or a spoon of salt or whatever. But here's what they're saying here. So we got a lot of analysts right here. Average analyst target price is $11.67, which is, of course, higher than the current $8.8. Consensus is about 9.45. So based on what analysts are saying, consensus-wise, there's still like $1 in it, maybe a little bit less, like 60, 70 cents in it per share, which is still a considerable amount of profit for the medium short term. Again, analysts will tell you what this kind of the sentiment is. Analysts don't give you price targets for long-term investing. Analysts are telling you what the street thinks about a stock. So if analysts are saying $9.50, that's a good representation of what the street thinks and what the retail thinks. So that's that. And this is also very important. I want you to see this, and I want you to really, really pay attention. One of the biggest knocks on Palantir, and still is this stat right here. Follow what I'm showing you here. This is the percentage of Palantir shares held by institutional investors. Guys like Vanguard, BlackRock, Goldman Sachs, the big boys. Now, as a company, you always want 60 to 65, 70% of institutional ownership, because these guys, they don't flip-flop like a winner schnitzel. They stay with an investment they believe in for a while. They add a lot of stability to a stock. Now, Palantir is nowhere near where it should be. I think the healthy ratio is about 60%. They're way below at 34.77. I'm not going to sugarcoat a piece of turd and tell you that this is good. This is not good. And this has traditionally been the problem of Palantir. But again, let's look at the trajectory, because I think the arbitrage on these investments, where there's gaps of kind of evaluation, is in the trajectory, not in the actual numbers. Everybody can see this percentage and they can see it's a low percentage, but not a lot of investors can actually look at the trajectory, look under the hood, be a little bit smarter, look at the bigger picture, right? We can debate all day about the freaking downfall of the US dollar. It's an interesting topic, but this shit actually makes people money. Not specifically about Palantir, but looking at the details, looking at the trajectory. Now, on Stock MVP here, we have this thing called Insider View, and you can actually see this chart right here. Now, the reason I want you to look at this chart, because it shows you the amount of institutionally held shares of Palantir since September 2020. And as you can see right here, I mean, this thing is going up faster than a tourist schlong in a Thailand brothel. Let's put it this way. That's all I'm going to say about look at what's going on right here. The trajectory is very clear. Institutional ownership is still low, but it's going up. It's going up every single quarter. It had a little dip right here, and then it climbed back up, and now it's past the previous all-time high at a new all-time high. So Palantir institutional shareholding is at an all-time high. The trajectory is up. Institutionals are slowly buying up the stock. And if you look at the biggest boys here, some of these names, I mean, look, Vanguard, BlackRock, this is absolutely incredible names. Again, this doesn't say anything. I mean, BlackRock, they own a piece of everything. Vanguard, again. But the fact of the matter is they're buying up more shares. I think that there's a good chance we might see Palantir at about 40% institutional shareholding at this pace within a couple of quarters. And that's, again, a good trajectory for the stock. Now, I want you to take a look at this tool we have right here. It's called the CIF. And this is an evaluation tool we have in addition to the CF model, sorry. I'm not going to go through the details, but this is basically what we're seeing here for the 5-year target price, which is something that analysts can give you, right? So for the 5-year target price of Palantir, the bear case is $7, which is about $1.90 below the current price. The middle ground is I just said middle ground, I don't know what I was saying there. So the middle case is the plain vanilla case, like $22.50. And the optimistic, the bull case is $38. So based on this model, you might lose $1.90, but this is pretty much seems to be at this point the floor unless something changes. There's a lot of upside for the stock if you're willing to wait for that 5 years. Again, there's nothing guaranteed about this. The only thing that's guaranteed in this world is two things: that we're all going to die one day and we're all going to pay taxes every year. Everything else is a variable. So at least based on these numbers, it seems like Palantir has still a lot of margin to give. This is my quick DCF model, which I ran right here. Not going to run through the details, but basically my DCF value for the stock is right now in this interest rate environment at above 5% interest, which is about 5% higher than what it was when I did my last DCF, is about $14 per share, which means at least in my book, as a long-term investor, this is a 50% undervalued stock. So the short answer here, whether it's too late to get into Palantir in these conditions, is that probably not a good time to jump into a stock when everybody's crowding in, when people are pouring into a stock. Probably not the best time to do it if you're a trader. If you're a kind of a swing trader or a day trader, probably not the best time. But as a long-term 5-year investor, you couldn't be bothered by this. It doesn't really matter. For a long-term investor, the only thing that matters is fundamentals. The question is Palantir worth more than $8.80 based on what we know today? My own personal opinion, which isn't financial advice, my own personal opinion is that it is. And that's why I'm absolutely happy with my position. And I don't think it's too late to become a long-term investor in Palantir. Is it too late to swing trade this thing? I don't know. I don't care. Simple as that. Now, if you want to use this platform, which I helped to build, it's my baby. I mean, it's my creation, mine and Pete. Sign up. There's a link below. You get to try it out for a week, free of charge, $0, free. If you want to stay on and use it later and use it for your daily stock research, which is something I do every day, don't pay the full price. I'm going to put a special coupon code in the description, which you use specifically when you actually extend your free trial for proper license. Use that so you pay only half price, not like everybody else. Thank you so much for joining me. I hope you enjoyed this little recap of what's going on in Palantir. Shout out to the Palantir community. I love you all. Again, before we sign off, don't click nothing, don't buy nothing, don't smash nothing, but sign up for Stock MVP.